Okay. Are you able to hear me now? Looks like the microphone was on mute. Just want to make sure I'm not talking to myself.
Yep, we can hear you.
All right. Thank you for confirming. Good to know. It has happened with me more than once that I've spoken for 5 minutes and then suddenly, and I wasn't watching the chat, and then suddenly I see people, hey, we can't hear you. I'm like, gosh, damn it. Yeah, at the end of the day, it's technology, right? Anything can happen. So what's up? What have you guys been up to? Any commentary on the market before we start?
Ready to take a dive?
To take a dive? I've been
Dive?
waiting. I don't know. If I had that crystal ball, life would have been much different.
I'm not predicting anything, but I expect that it might be going down for 5 to 10% correction.
Yeah, I've been waiting for that correction for quite long. And yeah, if it happens, I'll be ready. That's where the cash position is waiting for.
I don't think you have to wait long.
Okay, let's see. Yeah, I mean, the week started like that. We started with the market was weak, and then on Friday, for a change, a good news was a good news. It was actually good to know that good news for economy actually turned out to be a good news for the market. After a long time, we are seeing that, right? It is otherwise it is good news for economy, bad news for the market. But Friday was a different day. So anyway, so I think two big things on agenda. One is rubric. Wanna they filed their S1, so we'll spend some time in reviewing the S1 from Rubric. It's a company that I have heard about this company. One of my friend last year, he was talking about this company. And beyond that, I didn't have much info. So we'll dig deeper into what this company does, the whole 9 yards around when looking at an IPO filing. What are the things that I focus on? Look at its business, competition, financials, market size, and things like that. And then there are a few things that we need to still, finish from a previous session. One is definitely list of podcasts. So I will go through, and there's a list is long. I want to share not only the one which I am currently actively listening to, but also some of the stuff that I had on my phone and used to listen to, but not do any longer. So you can decide which ones you want to focus on. And I'll also invite, if you have some a podcast that you listen to and find it good, please share. I mean, that's what this meeting is for. We should learn from each other. And yeah, anything else? Oh yeah, and also want to talk about the boot camp. So finally, you guys pushed me hard enough over the last 2-3 weeks around the boot camp. So I did schedule the first drill of the boot camp. I will walk you through in terms of what is in my mind, in terms of what I want to cover overall in the options boot camp. So that's gonna be you'll have to be ready. It's not gonna be like 1 or 2 sessions. It's gonna be almost 3 months. We're gonna do one session per week, and yeah, I don't want to kill the. Let's talk more details once we discuss that topic. Niyanka says thank you. No, I know it's been long. Like it's been last I did was 3 years ago in 2021, and coincidentally it's the same April, I think. And after that I got back into my corporate life. You get busier, you don't find that much of a time, but I decided I'll at least do these Saturday sessions. And if that means not, I used to do actually Saturday and another one session on Wednesday, so I cut down on everything else. but continue to do these Saturday sessions while, along with the job. So back to doing a boot camp. What else? Yeah, these are the main things. And there are a few info on some macro, etc. Anything else you guys have on your mind? I see. Okay, let me go through the list. Bangalore Suresh. I see. Is that the first time for you? I don't. Maybe I missed out the name. Bangalore Suresh. Okay. We have some shy. About Chetan. Chetan, is this first time you're joining?
Yes, first time on this. Yeah, I just joined the group a couple of days back.
Oh, okay. Okay. Welcome. How did you just found us on Meetup, or did you hear from some other friend, etc.?
Yeah, from Meetup. Yeah,
Okay. Cool. And what are you more interested in, stock options? What's your focus area?
I haven't dwelled into options, so something I would like to learn. If it's something I want to do. It's mostly been stocks for a few years,
Mm-hmm.
so just open to learning new avenues of supplementing the investments idea.
Yeah. All right. Great. Good to have you. Welcome. What else? Do I see any
Yep,
other
thank you.
name? AJ. I think AJ has been here around. I recall seeing this name before. But uh, hey, AJ, are you new to this group, or you've been here before? Okay, AJ is shy. So I think I recall. Yeah. Lakeisha, I think I've seen you before. Lakeisha, is this your first session or?
Good morning. It's my third session.
Oh, okay. My apologies. Sometimes I don't remember who all I've joined.
No worries.
Okay. And what interests you in this? What are you focused on? What do you want to learn?
I am retired from the military and I just been spending money recklessly. So I just wanted to just find a better usage for my money.
So first of all, thank you for your service. Appreciate that. And yeah, I mean, we all are out here to learn from each other on how to make better use of our own money, because only we can be the best guardian of our money. So okay, all right. So let's get started. As always, everything and anything we talk here is just for fun and education. None of them is a financial advice. So don't go and start trading based on whatever you hear. I have to say this. I don't know why, but any case. So something new I did this week, and after a long time, I think after a few months, I added something else on my Think or Swim platform. Those are using TOS. If you need this study, do let me know. What I was able to do was to get a drawdown chart on my Think or Swim platform. So as you can see here, this basically tells us, based on the time period that I've selected, it it plots the drawdown chart, which, for example, this one is Apple. So it shows me in last 1 year, because this is 1 year, 1 day chart. Apple has had a maximum drawdown of 14%, right? And right now it's close to teetering, very close to that. So it's not fun. I mean, it's a good way to know when you're looking at some of the stocks that have, given you become a multi-bagger. But if you really look and plot it over 5 years, 10 years, you'll realize that many of those stocks have gone through, huge drawdowns. So let's do this exercise. And this is helpful if suddenly you see some of the, the market turns against you and you're like, oh gosh, I don't know if it's going to come back or not. It's a helpful exercise to know that many of these multi-baggers, they have to go through this pain. So it's nothing new. Give me a star. Let's plot the darling of the markets right now is Meta, which hit another 52-week high. Now it's close to 570. If we'll plot, let's look at Meta for last 10 year, right? In the October, it was down like 75%. 70. So the drawdown means how far below it is from its previous all-time high. So its previous all-time high for Meta was here, 383, and down to whatever $100, right? This is what, or $88. So this is what used to be called as the best buying opportunity when Meta was around 88. So today we can say, oh gosh, those who invested in Meta, you guys were lucky. It's at all-time high, but see, they have to go through these drawdowns of 44%. Another one, 33%. You see your stocks going down 40% of your wealth has been evaporated. It's not easy to stay, it is difficult. So, but this does give us perspective, saying there'll be many stocks who will have to actually, go through this all tough times. And the trick is to, if you understand the company, you understand the business, just hold through this drawdowns. Any other favorite stock? So there was, I couldn't find any defined drawdown chart. So use some chat GPT, use some stack exchange, finally was able to draw this drawdowns. Okay, let's look at Google. Google, what's the time period? I'm looking at 10-year 1 day. So this is the one, like 30% out here. So Google had a multiple in last 10 years. Looks like Google had many drawdowns more than, let's say around 20% plus. This is one more than 20%, 22%. This is almost 30%. And this is, we're talking about, I think this is a standard COVID drawdown. Irrespective of tech, non-tech, real estate, any sector, the whole market had a 35% drawdown. So this is, Google was down 30% from its recent peak. Another 20% out, or 18% out here. And this is where it starts, like 2022. The whole tech sector sought upon investors. And what's the max drawdown? We saw like 44%. That's the October lows, right? October 2022 lows. Google was down 44%. And it was down like 15% in the first week of March. I see another Palantir, PLTR. So Palantir has not been around for much longer. This became IPO in 2021, and of course had a huge run up, almost to high of 45, and has been in a huge drawdown since then. Because now, the spike of 45 becomes your previous all-time high, and it has never gone back to 45 yet. So right now, I think it's trading at some 23, etc. So close to 44%, 40% drawdown right now. And max drawdown at any point of a time was 86%. Can you imagine? You're investing in a company that is now down 86%. And that's where many of the, if you invested at the like $45, right? You're down 85%, and then you just give up. And then the company comes roaring back. And then you say, oh gosh, I missed it. So helpful to see some of the successful companies, and they all have gone these huge drawdowns. If you look at Amazon history, probably we'll see 80-90% drawdown on Amazon. So let's look at that. Not P Amazon. Amazon. Let's go at these 20-year 1 day. 20 years. So right. No, in last 20 years, the max drawdown was 65%. Okay, let's see if I can find, let's see, that time frame, max available. Okay, let's, I don't know, toss goes only, how far does toss has, let's see. Oh, 95%, 94.4%. So Amazon, which is like considered as the multi-bagger, one of the best stocks for wealth generation in the market, had 95% drawdown at some point of a time in its life. If you had invested $100 in Amazon, it was reduced to $5. So moral of the story and is or the moral of the chart is, guys, if the business is good, there will be periods when these especially the growth companies, right? When these great companies, growth companies will go through these huge drawdown periods. The trick is to understand, is that the business is broken or is that the stock is broken? And if the business is broken, then obviously, there's no business to hold on to that. But if the stock is broken, then yeah, it will recover. I don't know when this 95% had occurred. Not here. Here it's only 54%. What it took and got is
How far back does it go?
I picked up max, so I don't know how much of our toss pulls in. So let's see. Let me go back all the way. What 7 said? So this is what shows 97. So probably it actually picks up the whole the history. I mean, I don't know. Let's pick. So let's first see.
Yeah, so it's around 2001 there. Right?
Yeah. So 90. Yeah, it's around this 2092, 93. This whole
The
dot-com crash.
dot-com bubble.
Yeah, there's the dot-com crash. Dot-com crash. So that's where Amazon fell down 95%. Tesla. Let's look at Tesla. Yeah. Tesla's max drawdown in its history or has been about 75%. 75%. So again, a lot of people have made a lot of money in Tesla, but then you also have to go through 75% drawdowns. And looks like Tesla has been a lot more volatile because there's like 50% is pretty common. So you had 150% max drawdown in 2019. This one is, sorry. Yeah, this is 2019. This is 2020. And then again, this is 2022. And then again, close to 60% drawdown, which is right now. So very volatile. But again, one of our big winners in the stock market, right? Another one is touted as Netflix, right? It's a great stock to hold for a long term. It's a winning stock, and Netflix has about 82% drawdown. So investing is when I say investing is easy, means getting a stock idea, and that's why I always say getting a stock idea is easy. Holding and building the conviction is very, very difficult. And if you have
a DJT.
DJT. and if you don't have that conviction, we can't just hold through these big drawdowns, right? We picked up some of the best performing stocks in the history of stock market. Amazon, Netflix, Tesla, Google, all of them had like drawdowns of 80%, 70%, 95%. So only way you can hold through those drawdowns is if you build your own conviction, if you looked at the business of the company and, I think the business is good. I think the business is going to flourish. I think in the future, it does have, the world will need the services that it is providing. Stock getting cut in half, there can be multiple reasons why the stock will get cut in half. And in some cases, like 9/10. So yeah, but it's an interesting, sometimes if you feel that a stock is not performing and you're wondering, gosh, what's happening? This is a good company. It has happened you're not alone. It has happened with the best returning companies in the stock market. But that doesn't mean that every stock that has gone through 90% drawdown will come back up. It all depends on, hey, what's happening with the business. And there will be stocks that probably will never get back to their previous all-time highs. They will just die down because the business couldn't compete. So that is I definitely want to focus on, I put a lot more focus on the business side than just the price action. And there are investors / traders who focus only on price action. More power to them. It has got its own place, maybe for your short term. You want to do a swing trade, but for me, I mean, I've gone through that also. But eventually, I realized that if I want to really focus on the building the wealth long term, I need to look into the business. Right? Stocks like these would have gone through death cross multiple times. That doesn't mean you get out of the stock, because psychologically, if you have sold a stock at $100, it is almost impossible to buy back at $200. It's very difficult. So if the business is not broken, it has gone 50% drawdown, I'll hold through it. And that's where options help us, or help me to, just hold through it. Just don't give up. Anyway, so that was something new. Eventually was able to get because otherwise I used to go to Y charts trying to find, and after you do Y charts 2 or 3 times, they'll ask you to subscribe. So I was like, gosh, there should be some study for drawdown chart. So that's something new learning. What parameters to analyze whether a business is breaking? That's what we do. Like every quarter, when I look at do the quarterly review after the earnings report, you see, is it growing, not growing? If it is a early stage of its company life cycle, then I want to focus on the revenue growth. Once it start to mature, start looking at the profitability, right? And then later in the cycle, is it returning capital to shareholder or not? Those pretty, I mean, it's like how when I'm running my own business, that's what I look at. Am I making money in the business or not? People in the market may say, let's say if I own a shop, they may say that, I want to pay $1 million to buy the shop. Tomorrow, someone might come around and say, oh, no, I want to pay only 800K. But I know that, hey, I'm still making the money in my business. Really doesn't matter if the market is telling me the worth is 800K or tomorrow it says million. Nothing has changed in my business. So if nothing has changed in the business, then 800K, I'll probably buy a little more of it. So stock is the same, right? So ownership in the business and evaluate exactly the same way. And that's what every quarter, at least the bigger, the stocks that I hold, that form a big part of my portfolio, I'll go and review it, what they did. If it's broken, is it only broken? Is it like a one-time impact, or is it a longer impact, right? So that's how I'll look at a business. All right. Other thing, if you really look at a business on the balance sheet, you will see a term goodwill. Is goodwill good? So yesterday, I think late night, I had to take my kid for her some after school work, and was sitting there like 10:30, or we came back almost around midnight. And I was, I tweeted this saying, I have a confession to make. When I started investing and started looking at these balance sheets, I always thought goodwill means it's a good stuff. And it's only when I became more serious, I realized how wrong was I, that the goodwill is actually not good. So don't go by the names. And I'm seeing this, especially in case of investing, names could be very misleading. If you have a goodwill on your balance sheet, or the stocks that you hold, it's actually as a owner of the business. Eventually, I'm a shareholder, means I'm an owner of the business, right? I own some percentage of that business. As a owner of a business, not good for me. All it means is the manager of the business, which is the CEO, he is my employee because I'm giving a capital to the business. They went and bought or acquired another company and paid more than the value that they could put on all the tangible and intangible assets. Gosh, you did negotiate it really well for me, Mr. Manager. So goodwill is actually, as a shareholder or as an owner of a business, is actually not good, right? So, but the names could be misleading. That reminds me another one. I think it was 2 or 3 weeks ago. I was reading about a performance of a mutual fund. I don't know whether it's a mutual fund or ETF, but anyway, it's managed by a money manager of a fund. It's an emerging market fund, and had it was one of the best performing emerging market funds. But if you wrap it open, inside that emerging market funds, the stocks, like many of these Mag 7 stocks were there. So again, if you are looking to get exposure to emerging market, that's not the fund to invest in. Even though there are some regulations around the naming of the fund based on what kind of holdings you have, there are still such cases wherein the names could be misleading. So anytime if you're buying an ETF or a fund, spend a few seconds by just going and look at its holdings. Does it really hold what the name suggests it to be? So that you're not misled thinking it's a renewable energy because you want to you are climate conscious, you want to do a right thing for the world, you want to invest your money into renewable energy, you buy a renewable energy fund, and all you see inside that fund are the coal companies or fossil fuel companies. And these things do happen. So always, if you're buying a mutual fund or ETF, just look at what's the holdings. Okay, names could be misleading. Goodwill is one such name. Anything else you find any any such stuff where you found, oh gosh, I thought it's different, but why? I thought it's going to be something different, but it turned out to be completely different than what the name suggested. All right. What else? Another quote. If you think you're late for investing, think again. Warren Buffett was worth $1 billion when he was 56 years old. And had he not given his wealth in charity, would have been worth $200 billion. So 99% of his wealth came after 56 years. After he was 56 years old. So it's never too late to invest. That's all I will say. It's never too late. The best time to invest was yesterday. The second best time is today. So if you think you lost the race, no. The race is long, and we just started our first lap. So don't be discouraged. If you think, oh gosh, I haven't done anything, I didn't invest for my whole life, it's a good start. Anytime you start, it's a good start. And we have a living proof of it. All right, now let's talk about the boot camp. But today's price is expensive looking at overall market. So let's pull up SPY. Right, let's go back to SPY. 19, what's the 19? I don't know. Do you have a 19? How much TOS pulls in? TOS goes back to 90. Oh, so SPY must have been 93. Right. So where is 2000s? This is 1998. This is 2000, right? So this is the peak of 2000. I wasn't in the market in 2000, but I've heard, looked at the history, I've read about what happened in 2000. Market was its peak. It was a peak euphoria, and the SPY was 151. Where is SPY right now? 500 plus. Of course, I mean, we have to take into account the other standard stuff, which is, guys, don't, if you put money that you need to pay your bills, or do you pay your kids' college? Because what can happen in next 5 years, nobody knows. Statistically, there is a bear market every 3 years. I think I'll have a chart somewhere, maybe long back I shared, in terms of looking back the history of the stock market, right from the beginning of the stock market in 1890s. What's the probability, the return of stock market over various time period? So 5 year, there's been more than 90% of the time, stock market has returned positive for a 5 year period. Pick any 5 year period throughout the history of the stock market. Right? When it comes to the 3 year period, there's only 66% probability that the stock has returned positive. Means 33%, 1/3 time it could go down. Again, these are looking at all the historical numbers. 10 years, it's more than 95%. If you're buying something which I don't need it for 10 years, there's 95% chance you're going to make money. And 20 years, there's not even a single 20-year period, not even one 20-year period where stock market has actually lost money. I'm talking about SPY. There's not even a single 20-year period. So when we are trading in the market, or when I'm trading in the market, my view is so myopic that, gosh, I don't see anything what has happened in the history. To me, it looks like, oh, I'm at the all-time high. But if I see and say, I don't need it before I retire, I can hold it for next 20 years. There's never been a 20-year period when the US stock market has actually lost money. Now, why do I care? Imagine not investing in, this is the peak of 2000. Yeah, you go through the drawdown. You went through the drawdown for what, 5 years? Now, 2020, the market was like 400 plus. So that's a history. So sometimes to look in what's going to happen in future, it's more important to go back and look into the history, especially when it comes to the stock market. I found reading through the history is much better indicator of what might happen in future than anything else. So that will be my answer. Today it is high, of course. So I'm not going to put all the cash that I'm holding on the side, but I'm not going to get out of the market, and I'm not going to stop the regular investment that I do irrespective of where the market is. That investment I did when it is 420, that investment I'll continue to do when it is at 520. I might die a little bit up or down, either using options or using the stocks, depending on where the stock goes, but the baseline investment is going to be there because it's not failed us. And number two, if you know how to reduce your cost base is using options, then you can get the stock market to return you money even quicker, right? So that helps us to stay longer and in the market, irrespective of where the market direction is. Ross, what about it's different this time? Yeah, it's always we always think it's a different this time. That's our ego. But we think that we are something special. Market will do something different because this is Vivek trading in the market, right? Every generation thinks that this is going to be different. Nothing is always the same. So that reminds me, if you look for a book suggestion, there is a book called Same. Hold on, it's called Same. I'm looking into my bookcase. Same as Ever by Morgan Housel. So the more things we feel is different, the more it is same. You know, who said this? I can't recall, but someone said it. Things are unprecedented for those who have not studied history. Now, that's a very powerful quote. You feel it is unprecedented because we haven't studied history. What's happened in the market has happened. Actors have changed, tickers have changed, but the behavior is always the same. All right. So that's a little bit on this, just to get warm up. Let's talk about the boot camp. Okay, so yes, we're gonna start 5th edition after a gap of 3 years. I'll do another whole, right from basics to, I won't call it expert, but basics as a retail investor on, on how, starting from the very basics of calls and puts all the way to how to use options to manage risk in a portfolio, do some of the terms that hedge funds or institutional investors will throw around, prop traders will throw around, like delta hedging and all that. There's nothing, no rocket science, so we're going to cover that. I want to give you a brief outline. It will be from Wednesdays. Sorry for those who voted for Saturday. I know you can hear me for 4-5 hours, but I may not be able to talk for 5 hours. So I wanted to split it, and looks like for now, Wednesday is the time wherein, at least for now, my kid has told that she doesn't have anything on Wednesday. So I said, okay, I'm going to schedule it on Wednesday. It's going to be 6 p.m. to 8 p.m. Apologies for the folks joining from East Coast. It's going to be late. But since this being a weekday, I also wanted to be cognizant of the fact that there are a lot of folks joining from the West Coast also. So this is post office hours. The first one will be on April 17th. And my plan is to do 1 session per week. And I did schedule it on Meetup, the drill number 1. The different, you have to go and register for this one. The reason I want you for register is I will have to send you some homework. Yeah, it's not going to be, come listen and go away. This is a boot camp, and I'll be your drill sergeant. So you're going to go through some drills, and that means there'll be some pain that you'll have to go through. You'll have to do some homework. Yeah, if you're not, so you have to commit your time and energy to learn if you really want to go through this bootcamp. If you just want to be a casual browser, want to come and see, what's happening in the market, the Saturday session is for that. Anyone who wants to join Saturday session, I don't care what you're doing on the side, maybe watching movie on another monitor and listening here, me talking, but that won't be the case when you're on options bootcamp. It's a serious stuff, and I want you to take it seriously because that's the only way we're going to learn. Right? And it's going to be a series of, right now, I think it's going to be a series of 14 sessions. So it's going to be a 3.5 month long, hopefully. And it's perfectly okay. In my previous sessions I've seen, some of the people will drop out saying it's not for me. That's fine. But if you really want to take options seriously and do it the right way, or at least my focus will be as a non-professional, as a DIY retail investor who wants to manage their own portfolio along with your regular job. So I'm not going to talk about stuff like some of you do, like gamma scalping, because that will need you to monitor your positions very closely. I'm not going to talk about zero DTE options, because that you have to, open and close a trade within an hour or two. You can't do it if you're working, because you'll be called up in a meeting and there you blow your account, right? We don't want to do those things. So my focus will be how I did for 8 years along with my job is, guys, I don't want to do, I want to help options to build me wealth and protect my portfolio, and not really use it to do the trades that if it works, it's going to hit it out of the park. But if it doesn't work, it's going to wreck my portfolio, right? And if I don't monitor it closely, because I can't, I got a better things to do in life. I got a job to do in my life. Right? So that will be my focus. So if you are a prop trader, or if you, want to, you're looking for how to, let's say, take care of a volatility smile or Q, I'm not going to get into those details. Right? This is purely focused for retail DIY investors, because I don't think anyone actually talks about that section of investors. Okay, so this is what we're going to do. We'll start with the beginning portion, which is like basic intro, newbie strategy, how to acquire the shares, how to use options to buy the shares at less than the market price. And if you don't buy it, you still get paid because you waited. Next one will be call options and strategy to sell the calls at a higher than the market price. If you don't sell it, you still get paid because you waited. Then we're gonna get into the actual, some of the terminologies, moneyness, what is in the money, out of money, at the money, how does the overall option assignment process works, exercise works. And if you are new to options, this could be a scary stuff. I'm gonna explain, there's nothing to be scared of. How do you work around this process? How does this work? Fourth one will be, if you want to open an option trade, what are some of the steps that you should go through in your mind? Maybe when you're starting off, you may want to put a post-it, then it becomes a muscle memory once you do it for a few months. Intermediate level, we're going to look at a small account. If you have a $25,000 account, that's, I'll at least say, if you're going to do options, have at least minimum 25K account. And then, how to, some of the strategies that you can use on those accounts. Even if you have, let's say, 10K, you could still, sell call spreads, right? So we're going to talk about spreads essentially here, the risk defined strategies. Number 6, we'll create an options portfolio considering $25,000 to $30,000 account, how to create a diversified portfolio using options. Then number 7 is, what if the option trade goes against you, right? Stock goes against you. We'll talk about what to do if options goes against you. Then how does the pricing works? Now we're getting into more weeds. This is exit checklist. So we went through entry checklist. We're going to go through the exit. Now this is for more advanced folks who really, if you still survive the intermediate drill, you'll be welcome to into more the advanced one, where we'll figure out, what are some trade-offs that happen in options. Gonna get into the Greeks, delta, theta, vega, gamma. As a retail investors, which is the one that you should focus more on? What's your friend? What's your foe? When each one of these actually come into play, this will help you in determining, whether you should pick up a certain strategy, whether you should pick up a, zero DTE or not. Then we'll get into how to hedge your positions or your overall portfolio using options, right? I want to use options not to add risk to my portfolio, but de-risk it. So, and that's what my focus is. And then finally, as a retail investor, some tips and tricks, things that I had to go through it. And then I took a note of, okay, maybe I should have done this way, right? When I say retail investor, means you probably have a time, maybe 30 minutes or max an hour in the morning, because you got, maybe meetings coming up. That's the life which I had. I had a meeting starting at 7:30 a.m. with offshore teams, and then before the US time zone starts. So I can't be sitting and doing, work or trades, which will need me 2 hours in front of screen. I just don't have that time. So there are some tips and tricks that you can use to reduce the amount of time that you have to spend. We're going to go through that. So that's the overall outline. Right now, I'm thinking it's a 14 sessions. We'll see how it goes. So if you have to register for each of the drill, and I'll be putting it on Meetup. You'll see the Zoom link, but if you click on a link, it will take you to the registration page. So if you haven't completed the registration, do it. If you're interested, then do the registration. And so that the link will be sent to you in the email. Okay. That's an overview. So we'll see you, some of you were interested on April 17th. Okay. All right, what else? NVIDIA came across an article. It's a magazine of UK. So looks like NVIDIA is not just here. It's also causing little ripples across the pond in the UK. People are excited about NVIDIA. Nothing much. That basically this article talks about the Blackwell processor, which they unveiled in GTC. We'll see, how much does it contribute, but NVIDIA is everywhere, not just in US, but looks like even folks in UK are super excited about NVIDIA. Next, let's talk of okay. This is again from our previous session, Pershing Square Capital annual letter. So last week we reviewed the annual letter from Stanley Druckenmiller. Oh, sorry, not Stanley. Larry Fink, BlackRock. And the other one which I wanted to go through was a Pershing Square Capital managed by Bill Ackman. So if you have not heard about this Pershing Square Capital, it's a kind of a closed-ended fund. And his strategy, Bill Ackman considered to be very savvy. He used to be activist, no longer now, but very savvy investor. Harvard educated grad, ran Gotham Fund during its initial years, then created Pershing Square Capital. Best, I would say, known, famous or / infamous for battle with Carl Icahn around Herbalife. So there's a Netflix documentary, I think it says Betting on Zero. And there's a book written on the fight between Bill Ackman and Carl Icahn around Herbalife. But he's a respected authority when it comes around investing. So anyway, runs a very concentrated portfolio of maybe around between 8 to 12 core holdings, and of course use options to manage the risk and hedge the positions just the way we do. Has generated decent return, 16.5% annualized net return. So which is way, way, way better than what SPY had done. But before you jump into and allocate all your capital to Pershing Square, I don't think you can do it because it's a closed-ended fund. But let's say if it were cumulative return of 2,000%, this is the Pershing Square. But you have to go through these drawdowns. And again, any of the good funds, so unfortunately, when you talk about on an average, SPY returns 10%, between 8 to 12%. Average doesn't mean that it's going to go like this, right? At 8% up and up. It's always going to be like this. Doesn't matter whichever fund you pick up. We looked at a lot of stocks that have gone through 90% drop down. Pershing Square Capital, 2015, negative 20%, whereas the S&P was up 1.4%. 2016, negative 13.5%, as compared to S&P, which was up 12%. 2017, negative 4%, compared with S&P, almost up 22%. So massive underperformance for 3 consecutive years. I'm sure if we were holding one of this, we would have chickened out. But then we wouldn't have been around to get the gains which have accrued over 20 years. Again, another example of drawdowns are not to be afraid of as long as business is doing good. And of course, if you look at Bill Ackman, he had his own mistakes. Herbalife got, lost I think it's $4 billion by shorting Herbalife. He had his own mistake on Vertex Pharmaceuticals, not Valiant Pharmaceuticals, but then he made tons of money on Chipotle. Right? He took a huge position on Chipotle when Chipotle was like $250. Now Chipotle is hitting what, $3,000, right? But he runs concentrated portfolio, right? And yeah, so Chipotle is still its biggest position, which is 8.2%. These are the biggest contributor of return in 2023 is almost 32%. Biggest contributor to the returns were Chipotle, Universal Music Group, Alphabet, Hilton, restaurant brands, so on and so forth. Right. And Bill Ackman was also famous/infamous for in 2022 when the market had crashed. When the COVID had come in, he went on to CNBC and all the financial media talking about governments to do something, or creating a FUD scenario. And he had bought a lot of a protection via options in the market. So he made like a few $1 billion when the market had crashed. And I think then again, he came into news when he started building a position, I think, in bonds in 2022 and made a few $1 billion over there. So he's a seasoned investor. So what can we take away from his Eleanor letter? Talks of competitive advantages. And my focus when I'm reading this letter is, as a retail investor, what can I, learn from him? Learn from these best investors of the Wall Street. What can we as a retail investor learn from them? So looking here, competitive advantage of their investing strategy is they acquire large minority stake in highest quality durable growth companies in the world. So it's like, say, if you want to build insane amount of wealth, concentrate. But I'm also equally aware that if you want to lose it all, concentrate. So I kind of half into this. I will halfway subscribe to the fact that running a concentrated portfolio, I won't let any of my position go more than, any single stock, not the ETF, but single stock go more than 15-20%. I don't know if you call it concentrated, maybe it is, but I generally hold a lot more stocks than he hold only 8 to 12. I hold a lot more. But I do want to do subscribe to the fact that if you have the best companies, you should continue to invest in your best companies. Right? He doesn't have any need for being activist anymore now. But here, for us as a retail investors, we can pick up whichever company we want to. So one question that I get asked is, guys, why do you want to even, would you spend time in or you investing in stock market? We as a retail investor, we have no edge because there are the Wall Street firms. They have much better software. They have a lot more analysts looking at the companies. As a retail investor, we are doomed. And all we should do is hand over money to money managers, right? Conversely, retail investors, the reality is retail investors have a lot of advantages. One of the advantage which we can pick up from Bill Ackman's letter is we are not bound by any specific mandate. We can pick up the best quality companies, right? I'm not bound by any ESG mandate that BlackRock can slap on me. If I find a good opportunity in coal company, I'll pick it up. Many of the funds will not be able to do it. if the fund is a tech fund, right, doesn't matter whether the technology is very overvalued. They cannot invest in anything else but technology companies. As a retail investor, you're free to not invest, not add more capital. You're getting your 401k, you're free to not add into your, QQQ, not add into tech fund if you feel that the tech fund is the technology sector is overvalued. But if I'm running a tech focused fund, I have no option. Any new money coming in has to go into the tech fund, right? So as a retail investor, we have no mandate. We have such a huge advantage over the fund managers because they can't pick up whatever they want to. They have to stay within the boundaries of the fund, whereas we are free bird. We can pick up whatever is we feel is the best. So that's one advantage. Okay. Second thing, it talks about advantages of permanent capital. Because they operate with a permanent capital, the capital that is committed to them for long term, which also allows them to take more long-term commitments. As a retail investor, we have this advantage over, let's say, other money managers. We don't have to deal with any redemption issues. So if you invest money with the mutual fund managers, even if you have not withdrawn your money, someone else have withdrawn the money, mutual fund manager have to sell the holdings because they have to meet the redemption request. And you like, gosh, the market is down 30%. This is a time to buy and not to sell. But if I'm running a mutual fund and I get a request from other investors who want to withdraw their money, I have no other option but I have to sell. As a retail investors, we are not bound by that. If we manage our risk properly, when everyone else is selling, when the mutual funds are selling, we could actually go and buy. We don't have to worry about the fact that someone is gonna send me a redemption request, so I cannot invest or cannot take a long-term view. We are free to take 20-year long-term view, 50-year view. If you're just starting your investing journey, if you're a 20-year-old starting your investing journey, take a 40-year, 50-year long-term view. As a fund manager, you can't do that because one bear market comes in, maybe half of your investors will start to redeem their money, and then you'll have to sell it. So another advantage as a retail investor over Wall Street firm, which but just need to understand how to take advantage of this situation. We have that. So if someone's saying, guys, we don't have any edge, we do have edge. We just don't know how to capitalize on it, or we are not prepared for it. If you are prepared for it, there is a lot of edge we have as a retail investor over the Wall Street. What else? Third is their brand. I would say that's the general one. And finally, say, hey, we learn from our mistakes, which is what as a retail investor we do it. Anyway, so two things: permanency of capital and pick up the best quality companies. There is no reason that we cannot do as well as other money managers. And the fact is, most of the hedge funds basically underperform the markets anyway. So if we don't do anything but just pick up SPY, we'll be better than 80% of the Wall Street fund managers. So other thing that we looked into, Bill Ackman, was remember Google? We talked about Google a while ago, and I said, hey, why I'm bullish on Google? I gave you my thesis on Google. And this was when Google was being beaten up by the market because they goofed up on their AI. They did 3 times they goofed up on their AI, but I'm like, yeah, I think still market is given up Google for dead. But I'm still bullish on Google. So it was good to see validation of that thesis in Bill Ackman letter. Again, same stuff, the revenue growth, right? The digital advertising market is coming back. And now this year being an election year, we'll see a lot more growth on the advertising side. That's will be good for Google. Company realized significant progress from a margin expansion. So the profile of the business has become better, and they've been returning, capital to shareholder because Google generates so much of a cash flow. So stock got beaten up, but from a business perspective, Google was still fine. We looked at it's a quarterly review, and if I recall, I think the stock was beaten up after the quarterly review because of maybe a slight miss in the analyst estimate. Right? But Google is like still generates a lot of cash. And that's one. The fourth is they generate ample cash flow that they can purchase 4% of its outstanding shares. So again, same advantages that we talked about. Google has got a lot of training data, plus they got a technical expertise to build AI. Yeah, they goofed up in their initial AI rollout, but I think it's too early to call for the demise of Google or write its obituary. So that's what he talks about Google, and why he's bullish on Google. It's trading at 19 times forward earning, much cheaper than the overall markets. So these are the times when, if you understand the business and the stock get beaten up, you actually feel good about it because you got an opportunity to pick up the shares at a cheaper price. So that's what I think. Yeah, these were the. But if you are interested, he did talk about all of these companies, but I only picked up Google because that's the only one which I hold in portfolio, and that's the only company that we have talked about in some of the previous sessions. But if you hold Chipotle or Universal, etc., and you want to see his thesis, just go through the full letter. He sold off. He also talked about some of the position that he sold off. He sold off lows, and talked about why he sold off. So, but it's a good piece of information to go behind and see how some of the successful money managers, investors, what their thinking process. Right? They're not looking at nowhere. And I looked at Larry Finks, I looked at this, I read through Stanley Druckenmiller, Nish Pabrai, the Fairfax guy. None of them talk about that the stock has crossed, is in a death cross. We had a death cross in the stock and hence I'm selling. They're all focused on what's the reason why they're selling or buying. It's always related to business. And these guys are billionaires. So that's why it's important to focus on business. All right, let's talk about the podcasts. Before that, any other any other stock of Pershing Square that you are interested in? You want me to look at next week? Chipotle, UMG, Alphabet, we already covered. Hilton, restaurant brand, Howard Hughes, Fidelity, Federal National Mortgage, Canadian Pacific, Kansas.
I think that restaurant brands make sense. It's a total new. That's maybe we can try that.
Okay, all right. So next week, let me take note of restaurant brand and see what's Bill Ackman's thesis is. I don't think I ever looked at restaurant brands as a company.
Yeah, that's why I thought maybe total unknown we should pick something. Yeah.
Now, what is restaurant brands in? What do they sell?
I think it's multiple, I guess.
Yeah,
it's not one stock, looks like.
QSR. Yeah, under that, I'm just thinking, what's a consumer-facing brand that they'll have? This is not QSR. What restaurants do they run? Oh, okay. Burger King, Popeyes, Tim Hortons. Okay, all this is restaurant brands. and Firehouse Subs. Okay, these are the 4 brands that they have. Okay, we'll see. What's his thesis? I'm not a restaurant guy, so I never looked into that. But we'll see. How to justify valuation of CMG? Oh, what's I've never looked at CMG, and this is what happens, right? If you missed not, you look at CMG, came across CMG. I came across CMG when the whole rat incident was there, and the CMG fell down to 250. I didn't buy it then. Then it went out to 300, 400. I'm like, oh gosh, I just looked at 250. I didn't buy it then. And the more you delay, it becomes increasingly difficult to buy it. So imagine if I sold, that's why I'm saying, if you sold a stock at 100, it becomes almost impossible to buy back at 200. Our ego just won't let us do it. So I never looked at CMG since then. Now it is like almost 3,000. And like the whole rat stuff was not that far old, right? 4 or 5 years. Where was it? It was close to 250, 2017 or somewhere. Oh, this was here. No, that was pretty old. No, it had something, so 250, not in, okay, maybe around this 300 stuff. Maybe I'm confusing with this 300 stuff. 2018, yes. Because 2013, I wasn't even looking at the market, individual stocks. So not this one. So 2018, yes, I was looking at individual stocks, and that's where it's close to 300 or something. And I'm like, oh gosh, and I'll pick it up later. And that later never came. Oops. So yeah, we were to look at why is it super expensive? I don't know. I'm looking at it's growing sales 14% year over year. And what's the margin profile? This is a restaurant company with a 12%, profit margin. That's like a huge. Restaurants don't have a margin. So this definitely talks about a good, the brand strength that they have. And hence you have to pay up for its earning. That's why like P is like 65.52. It's not cheap. It's not cheap. It's expensive for a reason. Not too much of a debt, which I'm surprised they actually can lever up a bit. Price to sales is fine. 44. EPS has been growing at, let's say, 47%. So this is why you pay. They've been growing their EPS like by 47% over the last 5 years. And the margin profile is good. So yeah, it's not cheap. I don't think any good growth stocks you'll find cheap. All right, but what I'll do is maybe next week I'll also see what does he has to, what's his thesis behind CMG is. We are waiting for CMG to split. Yes, it's like what, 1:50, right? 1:50 split on CMG. All right, so let's look at the podcast. And the list is huge, but I want to give you a why, the reason behind each one of these. And then you can define, you can decide for yourself if this is for you or not. So I think I'm going to put 2 priorities. The number 1 means every day I'll go and see what's the new episode that they have released. If it is every day or every week, the idea is whenever they release a new episode, I'll go and at least look at it. What's a new one. Okay. Then there are some podcasts which I don't even care. Those are like, are not, I would say, that time sensitive. So even if I look at a month or 2 months down later, it's still fine. So I don't, look at them on very actively. So let's start with the ones which I look at actively. Motley Fool Money, and all these are free. You don't have to pay for anything. I like them because they generally talk about a business and fundamentals, And then there's sometimes they also have a personal finance section with Robert Brokamp called Bro. They also invite guests, sometimes CEO from some other companies to talk about, their businesses, etc., etc. So I'm paying up my tuition fee. I first heard about Mercado Libre, I think in 2018 on this free podcast. And now today, this is my biggest position. So there are stock ideas available everywhere. You just need to keep your eyes and ears open and then take an action. So I owe my Melly stock and all the profits to this free podcast. Second one, Option Insider. And again, they have a multiple variations under it. But Option Insider is very options focused podcast, right? This is where you'll find a lot of stuff around covered call, delta hedging, what are the new instruments available in the market. Some of the stuff will be maybe too deep. I don't use it on day-to-day basis, but it is good to know what's happening in the market. Now they run podcasts on different flavors. They'll have an episode every week. They'll have one episode or maybe more than one, or talking about only the volatility. So if you're like a VIX player or SVIX or VXX, they'll talk a lot about those volatility instruments. Something on a futures, it's called a T24, this week in futures options. And then they also have a segment for crypto. But majority is focused only on options run by former market makers, pit traders and all that stuff. So if you really, want to do the options, learn the options the right way, this is one. Bloomberg Technology is a daily news program focused on what's happening on the tech side. If I'm not, if I haven't caught up with the news on the tech side, then I'll just listen to this one. Like for example, they're talking about Apple layoff at Apple in the most recent one. Fourth one, Money for Rest of Us. This is again, I guess, once a week. Is run by a former, money manager, David Stein. This is more from, he'll talk about some of the strategies and or how to manage your own portfolio. But dumb it down for, a normal person to understand. So this is coming from a money manager. So at any point of a time, if you have questions, feel free. Otherwise, I'll just go down the list. The third one is We Study Billionaires, or maybe I should say the Investors podcast, because it's got a multiple flavors in this. One is like We Study Billionaires, where they interview, Warren Buffett, Charlie Munger, Howard Marks. Basically, they bring in a lot of sometimes fund managers and understand what their strategies are. Then they have a flavor or around, I think once a week, there's an episode on Bitcoin fundamentals. They'll bring in people from that ecosystem. Then there is another flavor of a millennial investing, which is focused more on someone who's starting their journey or a new to investing. So there is a different levels of discussion happening under the Investor podcast. 2024, I came across the Compound and Friends. This is, if you'll watch CNBC, the Josh Brown and Michael Backnick, basically they run a wealth management firm. And this gives us more insight into, as a wealth manager, what they are thinking, right? Same is the case with TDI. This is This Disciplined Investor podcast. The reason why I still have this is this comes on Sunday evening when, no other podcast is there. So for Sunday evening, my evening walk or anything I'm doing on Sunday, I just tune into the Disciplined Investor podcast. And I think this is the oldest running podcast, investing podcast that I'm aware of. It's been going on for more than a decade. Annual Spirits, again, a new edition in, I guess, late 2023 or 2024. coming from the same Michael Batnick. What I like more on this one is the sessions around talking your book, where they invite, let's say, some ETF issuers, some mutual fund managers will go and talk about their products, right? A few products, for example, I heard about, remember, I can't recall the name of that. It's from Neol investment manager. And I brought up that product into our Saturday meeting discussion, and I say, hey, there are products that I'm seeing in the market, which is like, you call it them, zero loss, but basically doing a collar position on your portfolio. And so these are the ideas. Some of these ideas I get from the Annual Spirits Talker book, wherein the issuers will come and talk about their products, how they are structuring their products. Some of these yield max. I also heard the CIO of Yield Max was in one of these podcasts talking about many of those yield max ETFs. Morgan Housel podcast. He's a great writer, and I read a couple of books from him. And he recently started his podcast. It's just good to listen. Okay, no discussion on individual stocks, etc., because he's outright an ETF guy, SPY guy. He doesn't invest anything in individual stock, but a lot more focused on behavioral aspect of investing, which is way more important than picking the right stock. At least I learned that lesson, after 5-6 years in investing. Gosh, I was running behind the stocks and didn't focus on me as an investor, which is way more important. Thanks to Morgan Housel. 2024 edition, I talked about this when we looked at how to find a good compounder from a Poland Capital, Jero show. He interviews the experts and based in the field, the fund managers, those who manage outside money, and understand what's the process, how they find out companies, how they structure the review, how they identify the characteristics of some great companies, and the reason why I started following is because I found ASML through the host of this podcast. So there was an article that I read, or maybe a YouTube video that I saw from John Rotonti, where he described ASML. I'm like, wow, is there a company that exists in the world that has got 100% monopoly? I want to learn more about that company. And again, ideas are everywhere. And that's where first time I heard was from John. And then I started to do my own research on ASML. It's been a great stock for me. And now, he's a great analyst. 2024 edition is this. I think the podcast itself was released in 2024. Since I'm there on right from day one, first episode is basically bi-weekly podcast with two great VCs, Brad Gersner of Altimeter Capital and Bill Gurley. He doesn't need an introduction. He's a general partner of Benchmark. Now he is not GP anymore. He's like kind of retired. But these guys have been around in Valley for like a generations, right? So you get to hear what Bill has to say, in what he has seen throughout his life. And the good thing is that they talk about what's happening right now. So this gives you idea into what one of the best VCs have to say or talk about the current market. And the little bit topics around, what's happening even on the public market, not just in the private market, but because Altimeter Capital invests both in public as well as private. So that's a BG2. Next is a daily analysis. This is a daily one from it's called a Breakdown. It's a crypto focused podcast. So what Nathaniel will do is bring up what's the daily basis, what's the macro or geopolitical information or news around the crypto side. Right? So for example, the Nigerian folks getting arrested. Sorry, the Binance folks getting arrested in Nigeria. 2 days ago, U.S. government is selling the stash of a Bitcoin that they had confiscated. So basically, quick update on what's big stuff that's happening on the crypto. Next one is Bankless. That's again crypto, but mostly focused on Ethereum ecosystem. The two guys will generally get, this is a little more deeper. If you want to understand or get deeper into on the ecosystem, on the tech side, what are the projects, etc. Recently, they also started bringing in folks from outside of Ethereum, like Bitcoin ETFs, issuers, data availability layer, icon layer, and most recently they I think it was 2 episodes ago. And this is where you actually go behind the news, in these podcasts and understand what's, is the crypto dead or not dead, right? If you just look at the crypto prices, you'll be, in 2022, you must have thought the crypto is gone forever. But if we keep up to date and listen to what's happening in the ecosystem, you'll see, gosh, there's a lot of development still happening, right? So, and most recently they talked about BlackRock. They issued a token on Ethereum. BlackRock, as you guys know, the biggest asset money manager, they issued a treasury, kind of a treasury bond, but on Ethereum. This is where we start to see the example of a real world asset being tokenized on Ethereum. So, which is a BUIDL token. So, BlackRock has tied up with another company called Securitize. They got the CEO of Securitize to talk about how, how the whole stuff works, how your issuing will work, how redemption will work, how the users will get the yield from a treasury and all that. And so it's good to know what's happening behind the scenes. Next one is Unchained. This is hosted by Laura Shin. I've been following her for now almost 7 years. She was the first a mainstream journalist when she was with Forbes to actually talk about crypto, right? And then she started on her own. Before Unchained, she had another, I think she was with Coin, I forgot. Then anyway, right now she runs her own podcast called Unchained. Again, this is like no talking about BS coins, very well focused. It's a good journalistic quality from this podcast, right? It's not always max. It's not like I'm talking to Bitcoin maxis always, or I'm talking to Solana bros, or shitcoiners. I like the quality of the topics that she pick, very relevant one, and she'll invite, even if some of the crypto OGs don't like some of the guests. Recently, she invited the one of the founder of that 3 Arrow Capital, right? There are two founders, like Kyle Davis, right? And crypto Twitter was all against her, saying, "Why do you give him a platform?" Because 3 Arrow Capital went down and crashed along with the crash of Luna, and huge billions of dollars were lost. But as a journalist, you have to be, I would say, impartial and the idea is to bring out the truth. Let the public decide what's right or wrong. So the next one is again the part of the Investors podcast. It's called Bitcoin Fundamentals. Similar, because I don't have anything which is, and this is specific only to Bitcoin. They don't talk about, for them, Ethereum, Solanas, and all are crap. So it gives you perspective on the Bitcoin. This I started it in late 2023 or 2024. I think this was in 2024. After the Bitcoin ETF started coming in, I realized that actually there's a podcast that Bloomberg run, which they mostly focus on ETFs. And so if you're an ETF lover, they'll talk about different type of ETFs and what's happening in the ETF world. Now, some of them are need basis, all in. I used to be fan of All In. I've talked about this earlier, but off late I'm seeing them putting too much of airtime to politics, and if for or against, either of the parties, which are like of no interest to me. So I'm like, okay, this goes lower in my priority. But again, this is hosted by some of the well-known VCs, Chama, Jason, David Sachs, and David Friedberg. When they talk about sensible topics, they talk really good. But off late, I'm seeing a lot more, political and social topics being discussed. So not that interested anymore. All right. Any questions so far? All right. Business breakdown. Great podcast. But again, I don't have to look at daily basis, because if you talked about how a business works, that's not going to change in 2 months, right? Uber, I owe my Uber investment to business breakdown. And I think first time I heard it in business breakdown around all the Uber businesses, I knew Uber as like ride hailing, but when this was almost like 2 hour long podcast where they broke down everything in Uber. And then I said, wow, I didn't know about it. Then I came and did my study around Uber. Then I presented it after I done my study, then I presented in this our Saturday meeting saying, hey, I think I'm bullish around Uber. Seems to be an app that you cannot live with. It's not just ride hailing. These are the, advantages that I see, and has turned out to be good. So again, to understand the details around business, I find this podcast really well. Macro voice is more around the macro stuff, energy, dollar liquidity, monetary policy. I'm not that a big fan of a macro, so once in a while I'll tune into it, not every day. I don't even know if they do it every day, because it's on a need basis. The journal, there's basically they'll pick up a news topic and get into the detail of that. It's just news, not specific investing. 6-5 podcast. This is good if you are very tech oriented. If let's say stuff like data flow management, K8s, cloud deployment, is your thingy, data analysis, or talking about, chip nodes in the chip. If that's your thingy, 6-5 is run by tech analyst Patrick Moorhead and Daniel Newman. They'll pick up 5 topics per episode and talk about for 6 minutes. That's why the name 6-5, or maybe 6 topics and talk about 5 minutes. I don't know which one was that, but they'll also give us a good rundown on, let's say, any conference that happens, right? If you want to know what's happened in NVIDIA GTC, they'll have an episode on that one. Or if, let's say, Cloudera is running their Amazon running their Amazon's as a reInvent, right? They'll have it. If the Cloudera is running their conference, they'll come and talk about what they did. Intel, they'll talk about it, right? So but they go really sometimes detail into deep tech, right? So if you are interested in tech, this is one. Another need base is what Bitcoin did. I mean, it's like so. I used to listen to it. It's still there, but maybe once in 2 months, I'll find if the guest is good, I'll listen to this. This week in startups, this is for current wannabe startup operators. I used to listen to it diligently, but haven't gone through it in last few months, right? Rule breaker investing. This is again from one of the founder of Motley Fool, that they talk about innovative companies, but also discuss, the episode that I like on the rule breaking investing is their mailbag, which they do once in a month. And I think that's all I listen to, is they respond to listener questions. So this give you a good idea what other people are thinking, and listen to their responses. Bloomberg Business Week, again, more from a business news perspective. Protocol, this is for crypto. If you get into the deep, more at a tech level, right? On the protocols side. So for example, Yesterday, there was an episode around on the Polygon layer. They're building another, aggregation layer, which is trying to connect different L2s. That's a concept no other chain is doing. You want to get into the details of how that will work. This podcast will invite guests that get into the details around on the tech side. And FII is from ARK Invest for your information. For your innovation, and hosted by Kathy Wood and some of her other research managers. They invite guests based on the topic. So if you are interested in, let's say, genomics, so basically those 5 drivers that Kathy would always talk about, what's happening with the gene splitting. What I like here is when they bring in a lot guests around the Bitcoin side. It gives you a little more perspective, and you get to hear different guests on from a Bitcoin ecosystem. Okay, 2023 let's looked at investing for beginners. Sometimes you need to know what beginners are thinking. So this is a good podcast if you're just a beginner. You'll find a company out here. Invest Like the Best is a Patrick O'Shaughnessy. I used to listen to it. No long, I don't do it anymore. I don't have it on my phone anymore. The best one yet used to be called Robinhood Snacks. They'll bring up 3 business stories every day. I don't listen to it anymore. I don't have it. Similar is the case with equity. If you know what's happening in the angel investing, they give a roundup of which companies are raising what kind of a funds, etc. I don't listen to them. I just don't have a time, right? There are so many of these. So I would say, yeah, the one with the need bases are, yes, whether probably I will or most of the time won't, especially if I don't find anything else, then I look into what's there in one of these podcasts. All right, that's the whole list. I know it's too long. Okay.
When do you get time for the hearing this? This is so many of them, right?
So when I go out for a walk, this is what I do. If I'm driving, this is what I do. And and again, you don't, not every day, every podcast will have an episode coming every day, right? A Motley Fool is a daily one. Option Insider is a daily one. But let's say Option Insider, if they're doing the volatility one, I'll skip it. Futures, I don't even look at it, right? Crypto, I don't even look at it because their coverages, crypto is all around options on crypto. Right? I don't have to worry about it. So only thing I'll focus on this one is their they'll have a option block, right? So, and like this will comes only on a weekend. TDA comes only on a weekend. So yeah. And sometimes then, like yesterday night, I was looking at, I couldn't find anything which was worth on my number 1 list. So I went to number 2 and I looked at the protocol. So I spent an hour while I had to drop my kid. I was just doing my evening walk, or I would say night walk after dinner, like from 10 to 11, and was listening to the protocol because they talked about like a new stuff, exciting stuff that Polygon is doing. I'm like, okay. So yeah. And play at 1.5 to 1.7. I played at 1.25 speed.
Makes sense. Thank you. These are great tips. We have time, but we don't know how to organize. But yeah, so
Excess returns, gold, and guns. Let me take a note of that. Okay, let's see. Which are my top 3? I try not to miss. Top 3 are a Motley Fool, and then the option one on the from Option Insider, and right now the third one is the Compound and Friends. So these for the stock market, and when it comes to the crypto side, and again, like breakdown is like 10 minutes, right? And Unchained, depending on the topic, she'll have 30 minutes, sometimes more than an hour. But it's more dependent on what topic is there. For example, when the Ethereum Denken upgrade happened, I I went out for a hike, which was like 3 hours long, and I listened to, I think it was a Bankless or Unchained, because they invited a researcher from Ethereum Foundation who went into the details of Denkan upgrade. I'm like, okay, I have a 3 hours. I can listen to a 2 hour long podcast, right? So anyway, so that's around the all podcasting stuff. Sorry, it took too long, but I hope it was useful. Okay, so let's jump into. We have a rubric S1 to cover. Let's quick look at the market. I was surprised on the energy side, which is like up 17%. You know, that's whereas in 2023, energy was like one of one of the worst performing sectors. I think it was a worst four or five, like below the bottom 4 or 5. But right now it's like up 17% for a year. So that was surprising. Other than that, I think everything is standard. It's the same stuff that we have seen since the start of a year. Gold, yeah, gold is like, it's killing, man. Gold is like hit new all-time high. And I actually tweeted about gold because I saw a huge move in gold. And even if I look at, let's say, first of all, look at this huge up move from 190 to 215 in a matter of 3-4 weeks, right? And what, hold on, let me just see. What I drew was something that let's say, I think at 5 year. Okay, let's do. So looking at a math guy, right? So I was looking at how far the gold moved, how standard deviation, how movement did the gold has. So right now, it's already 2 standard deviation away looking at last 1 year of a data. Even if you pick up last 5-year data, let's go 5-year daily. Maybe I should favorite 5-year daily. Even if I go last 5-year daily, it is like about 2 standard deviation more, which generally don't happen, right? It's not, I'm not talking about the price is 250. The fact is that it's away more than 2 standard deviations looking at last 5-year worth of data. So how many times has it happened? It has happened only once here where it was away. Oh, sorry, this one like 3 standard deviation away. 2 standard deviation is over here for once. It just touched here and never over there. So I was looking at this, and I could be 100% wrong, right? But if you're looking at technical analysis, rather than looking at price action, I put a little more faith on this one. And I'm saying if it has to, it's only last 5 years, it made a 3 standard deviation move only once, which was in 2020. Right? Assuming if it crosses, 3 standard deviation, which is all like almost $225, the probability of that is low, or it going and holding that seems to be low because last 5 years is not done that. It hasn't held consistently, above 3 standard deviation. It has generally tend to come back once it has hit the 3 standard deviation. So I looked at this and I sold a covered call at 225 for May expiration. It will be too extended because even for last 1 year, it actually never crossed. If you just look at a 1 year, it's already above 3 standard deviation. I went to 5 year, it's happened once. Let's look at 10 years. 10 years. No, it was only one time when it made 3 standard deviation moves. Right? So then I basically sold a covered call at 225. Let's see how it performs, because I feel that, gosh, this is move way beyond the normal. Can it continue to do? Of course, it doesn't know that I've sold a call, but we'll see. But yeah, gold has been like through the roof. The reason I think central banks are buying gold, and because we don't have a I mean, the U.S. Treasury is not as strong as it always used to be. And central banks, they are diversifying, and there's a demand from central banks for gold. Zimbabwe, this week, the central bank governor of Zimbabwe told that enough of money printing. They had what 500 billion% inflation. And Zimbabwe is a example we take when we talk about how governments just print money. There was a news from them also saying, guys, we're gonna peg it to gold and basically not gonna print. Anyway, I mean, the whole idea is that there's a demand coming from the central banks for the gold. So that's why the gold has, we've seen such a huge move up in gold. Could this also indicate, hey, it's gonna be a, little economy may be tough, some stuff around uncertainty, so basically gold is generally a hedge, right? It doesn't produce anything, so it's just a hedge. People are feeling a little jittery around how the governments are managing the money. They're just gonna print away and dilute our purchasing power, and we want to retain our purchasing power. And gold is one instrument to retain your purchasing power. It's been an instrument for thousands of years. For the new generation, the crypto they are doing on a Bitcoin is another instrument. I'm not saying you decide whichever one you want to pick, but that's one reason why gold has been through the roof. Utilities, let's look at XLU. Utilities as a stock has been high, but let's look at 5-year. Okay, at least look at an XLU. I mean, it is still looking at even though the stock has moved up from 59 to 65, but still nowhere, where it was. And I mean, it's still below its the normal average line. All right, so that was around the sector side. Fear and greed index still 61. Thank you for the little bit fair in the start of the week, but I thought market will crash a little more on Friday. I was waiting for it, but didn't happen. So we'll wait to see. I hope Shree's prediction come true and market does crash 5%, 10%, so I can buy some great companies at a cheaper than where they are trading right now. On the crypto side, I don't have too much, but came across one tweet which has got this chart around how analysts are just going crazy on MicroStrategy. I don't understand. They're putting the price target to 1800. So they had a price target of 780. BITG is one of a big bank in Brazil. And their analysts, they've increased the price target from 780 to 1800. And the reason is implied premium has settled in a new norm above 2x. Like you can, this is like, you can just create it out of thin air, right? Implied premium. I'm like, God, this is where I hate where they don't do any real work and saying, I think the implied because if you look at the MicroStrategy, the 95%, 100% of its valuation is based on the holdings of Bitcoin that it holds. And the current valuation suggests it's priced as if the Bitcoin is trading at 170K. Today, Bitcoin is about 70K. I don't know right now where it is. Right? Maybe close to that. Let's go to
67 something.
67. Okay, 68. Right. So, and MicroStrategy has, I don't know, whatever, 200 or 120, whatever the number of Bitcoins. And if we multiply that by the price of Bitcoin, you get a fair amount of, okay, this is the valuation. You slap in another, 5 billion, $10 billion of additional valuation from the software business, right? That should be Microsoft valuation. Oh, sorry, not Microsoft, MicroStrategy valuation. But no, MicroStrategy is currently trading at like as if the Bitcoin is trading at 180K or 170K. And now to justify that price, analysts are saying, you know what, looks like the implied premium of the holdings is more than twice. And hence, we are saying that is 1800 is justified. Who knows? We'll see. Maybe if they're right, if they're thinking each Bitcoin, the MicroStrategy can earn a premium by holding a $70,000 Bitcoin and can sell it at whatever 170, then probably they'll be right. I just don't buy it right now. But we'll see. If Bitcoin itself is 170, yeah, then the valuation is justified. Tom Lee says MSTR can go to 1800 to 1950. Yeah, he's always bullish. BTC can go to 82K. Don't even ask me about BTC numbers. I've seen many numbers all over the place. I've seen 100K, 150K, next year 500K. Who knows? It's all anybody's guess. MSTR is still buying BTC by raising the money. Yeah, he's still dumping the shares. He's been selling his shares and buying Bitcoins. The trade will work as long as it will work. I'm only scared when it's going to unwind, because this more than 2x, 3x premium is not going to stay. So, and I don't even know why it will stay. Now you have an ETF. Now, okay, I get it if there are funds whose mandate is to only invest in fixed income securities. They will probably buy MicroStrategy convertible bonds, because these are convertible. They'll give you whatever 0.6% interest. So so you have certified that you're investing in fixed income security, which are convertible, means they'll convert it to MicroStrategy stock. But if the ETFs stay for longer and we see more traditional investment firms, once they're done with their due diligence, approving Bitcoin to be, Bitcoin ETF as an instrument that they can hold in their portfolio, why would anyone pay MicroStrategy? So that's the one thing which I'm not able to reconcile, is now we have an ETF. It will take 6 months, maybe a year, for the risk management department to give a clearance, and for money managers to understand the behavior, get a decent history around it, and warehouses like Morgan Stanley, etc., to enable make the Bitcoin ETF available on their platform, right? Until then, yeah, if as a fund manager you want exposure to Bitcoin, you go and buy MicroStrategy. But that's one stuff which I've not been able to get an answer of, why it will continue to stay, let's say 2 years down the line. Now we have ETFs, and all the big money managers probably are looking at it and trying to understand. If anyone have thoughts, please enlighten me.
One thing, Vekji, but thing is that after spot BTF, right, Bitcoin, right?
Mhm.
Now the ETFs are free to add, and every investor, right? For example, for they manage their people money, right? They want to add 0.5 to 1%, like gold, how they are adding minerals and all these things, right? Now there's a new norm came, like have a little bit of digital currency, which is kind of Bitcoin. So that thing is coming. So when that is coming, and the people are not selling it, when because it's again supply demand, right? And people are not selling what whoever has it, so there's no option, it has to go up. That is what exactly happening. And the spot BTF is creating another demand, That's what my thought. Maybe I may be like still understanding it, but
No,
we need to see.
no, you're right in terms of the demand on Bitcoin. I'm not talking about the demand of Bitcoin. I'm talking about why MicroStrategy should enjoy so much of a premium 2 years down the line or
Because
down
they're
the
holding, right? They have the old bitcoins in that. They are not selling it. That whole market cap is increasing because of that it's a holding. But if it crashes, like a BTC
yeah.
goes, that they're gone.
Yeah,
That's
so the idea is I can just get a Bitcoin exposure directly in the market.
yeah,
I
but
don't
we
have to.
have to manage that. For us, the problem is yeah, it's a process is big. Now the spot like a GBTC, RIBIT, whichever you buy, you just buy like a stock, you just hold it, and you don't need to worry about that management and everything of
Yeah,
that.
exactly. That's what I'm worried. Why should I pay MicroStrategy twice the premium, the MicroStrategy stock twice the premium of what the Bitcoin is actually trading in the market?
Yeah, true, true. Yeah, that's a
That's
good
what I
point.
don't understand.
Yeah, makes sense. Yeah.
Before the ETFs were there, I know that option because if I want to get a Bitcoin exposure, I buy GBTC, which is a closed-ended fund, means I can't freely trade it, or I go and buy MicroStrategy. But now the ETFs are there, and maybe some of these big money managers haven't done their risk analysis, they haven't done their due diligence on ETF yet. Well, it's a matter of time, right? It's a matter of a year, 2 year. Once they have done their due diligence, then why should anyone pay Michael Saylor a premium of like 200%? What about pair trade, long Bitcoin and short MSTR? Oh, this is I've heard about this pair trade. And I think one of the podcasts, I don't know, was it a Bankless podcast? One of the guests actually covered this pair trade. My only thing is short MSTR, the craziness can stay longer than your account can stay solvent. So if I were to short MSTR, I'll rather do a call spread. I'll not go naked. But yeah, right now, I have a short delta in MSTR. I basically have an unbalanced iron condor, basically wider on the call side and narrower on the put side, but overall negative deltas on MSTR. Just trying to hedge it. Anyway, what did I buy or sell? TLT, Uber, FBTC, Melee were buys. Intel, the put got assigned to me. So I became a buyer. TSM, I had a call, so I sold some of the stock, bought back the call. So nothing different, but these are the ones which I actually went and picked up some stocks, deliberately added to it. All right, final topic, S1 review. Naked strangle. Never, I'm not gonna do, I don't have the guts to do a naked strangle on MSTR. I don't know if you were just joking, but this is where you can wreck your portfolio. What do you think about interest rates cut? Looks like job market is strong and inflation is under control. So let's, I didn't go through it. I think I have a link. Let's see what market is pricing in. But I don't have the link. Fed Watch 2. Oh, here we go. Let's look at. There are many more intelligent people who probably have to say about this. So let's look at probabilities. Okay, is this a eye test or? Let me just put it here. Okay, this is better. So no rate cuts in May, 95% probability is it's gonna stay where it is. June, market is pricing in a little bit of like 25 basis point rate cuts, 50%. It's like I would say still 50 and 46%. It could turn either way around. So maybe nothing on June. July may be the first one where the 49% expectation is that we'll have a 25 basis points rate cut. Almost 27% still says no rate cut in July. So what else? Then September, only 40% are expecting a rate cut. Expecting it to be 475 to 500. Almost 35% says probably will stay here, and 10% says probably no rate cut. So to me, it looks like maybe one or max two rate cuts. At least today, the probabilities are showing that the market is pricing only one or two. How many actually could happen? Maybe zero. But we have election time, and even though the Fed is supposed to be neutral, who knows? Giving a rate cut would be good for incumbent party, and they may force it, though not legally, and we may get rate cut. Who knows? Do we need a rate cut? Probably not. But we have done many things that we don't need, right? The Fed has done many things that we don't need because it is politically expedient thing to do. And I have no idea what Fed will do. But market is pricing in maybe one rate cut, maybe in July. And yeah, probably maybe one or two max.
But Vivekji, but one, it is needed, right, for housing market because that is like not turbulence because people are still buying because it is on the edge. People are kind of buying because they're expecting it will go down. It will go down.
So Fed doesn't care about housing market. Fed has got two mandates on employment and inflation. Housing is not their concern. Stock market is not their concern.
Okay, I see point.
So if Fed doing anything else, then they are moving out of their mandate because there are other external factors that are driving it, which and they could do it. Other external factors could pressurize them. The government could, kind of force them to do something. Like Trump used to tweet, like cut the rates, cut the rates. But that's not Fed's concern. Maximum employment and price stability. These are the only two things that Fed is concerned about officially. Let me put it that way. And today, both these things says there's no need for a rate cut. Inflation is going down and unemployment is also going down. Forget about the tech sector. We had another layoffs on Apple and Amazon's, but overall employment is still pretty strong, less than 4%. Why do we need a rate cut? So we don't need. Stock market needs it. Housing market needs it, but that's not Fed's concern. All right, let's jump on to the rubrics S1, and that will be the last topic for today. And oh, come on. Hold on. All right. So, before that, any questions? Otherwise, this will be our last topic. Yeah, Chandra said maybe one, just for the sake of it. Yeah, because elections are coming. Anything after June is election interference, they better hurry up. Yeah, if we get before June, now the bigger thing is, if you've already priced in a rate cut, and if we get a rate cut in June, is market gonna go high? I don't know. I mean, this is the most difficult question to answer is what is priced in, what is not priced in. Nobody knows. A lot of people will come and talk after it has happened, right? After it has happened, even I can also come and talk. Tell me before it happens, which unfortunately no one knows. Or I would say fortunately. So we all have an equal footing, on the ground. No one has got any edge. Okay, so let's start. So I just started preparing this document. As you know, one document for every stock. So let's start with the rubric. What's the mission statement? Securing the world's data. So they are basically focused on, that's how they started. They are focused on data security. Okay, let me address this last comment. Then I'll get back to this. After cash carry comment, market dropped because Kashkari told, right? No rate cuts or something. But Kashkari is not even a voting member. So he can say whatever he wants to say. He doesn't have a vote in setting the Fed policy. He's not a voting member for this year. So I don't know. And the voting members are not saying what Kashkari had said. So I don't even know why market reacted so strongly on Neil Kashkari's comments. His opinion is just an opinion. He doesn't have a vote. But who cares? Market is so sensitive. So it is, and that happened like when the morning, when I was, so generally I'll finish up within an hour. I'll be done with any trade management, or I have to open a trade or do anything. I'll be generally be done within an hour. And I finished that. Then I started get on to my reading. Then I went down to make lunch. And after finish making lunch, and it's like 12:30 or something. And then I want to look at, okay, last 30 minutes, did anything change? I came on a little market was red. I'm like, what happened? I think this was Friday, Thursday, or whatever, the Neil Kashkari. I'm like, hey, what happened? Then I realized, oh, there was some Fed comment came in. Whatever. Anyway, let's get back to rubric S1. Their mission statement is securing the world's data. So they started with securing the they started with the focus on the data security, right? Not network security, not infrastructure security, but the security of the data, because data is the most important asset. So first thing I do is go and read a letter from CEO. Again, rubric was found on a vision to deliver business resilience by securing the most critical asset, which is data. We build distinct architecture to combine data and metadata. Now, basically, they're getting into, I think we'll go more detail into it when I look at the tech stack. What's the tech behind it? But he also talked about, a little bit of AI, which I found a little more frivolous. Saying this allows the transform backup data into strategic that sits on the epicenter of security and artificial intelligence, right? And lastly, talks about our goal is to lead the data security market, which we believe is the future of cybersecurity. So not really sure, are they going to start competing with CrowdStrikes and the Zscalers of the world? But they're starting with data security. And what I've seen, and if there are any folks who work in a data or software security firms, please chime in. But I've seen like slowly and steadily, each security firm is moving into everyone's area. Right? You'll start with the network security, then you'll start moving to infrastructure side, and then you start securing data, and then you start talking about edge security. So I don't know what the differentiation will be, but we are early in this whole cybersecurity space, so I'll wait. What else he talks about? Talks about a culture which is encapsulated in Rivet, which is relentless integrity, velocity, excellence, and transparency, which is their North Star. And again, I found out we are defining the future of cybersecurity. So they really want to, looks like in future, they want to move away or expand beyond just the data security. Right? So afterwards, let's look at how the company started. It started in 2013. So it's almost just 11 years old, not very old company, with the name of Scale Data. Then they changed to Rubric in 2014. 3,100 employees across 23 countries. 46, almost half of employees are outside of US. So that helps in cost. Managing the overall cost. 26% is in India. All the founders are, I was actually talking to, like I said, I was talking to a friend at the start of a session. I was talking to one of my ex-colleagues. We met after almost 20 years. And he told me a little bit story around the founder of Rubric, but I met him like last year. And like the founders are like his classmates or batchmates. And he told me how they all got together and, to start this company. So anyway, they got 255 US patents, 207 applications pending in US, headquarters in Palo Alto, Bay Area, another Bay Area company going for IPO. So forget about this. So basically, in industry background, I want to look at what's the overall big industry that they're addressing. Is it the industry big enough for company to become bigger? What's the overall, their addressable markets? So this is like a general talk around how the data is going to continue to increase, right? You don't need me to go through this. We've learned, I think every company dealing in data talks about the same thing. Data is exploding. We have a lot more regulations coming in. So more data, more security needed, and hence that's why they are in here. Now you can't have an IPO in 2024 without talking about AI. So here we go. Gen AI needs data security. Right? As if the other data doesn't need it, but you get to get Gen AI in your IPO prospectus. So here we are. And obviously, Gen AI could lead to more sophisticated cyber attacks. These are the, I would say, downsides of having a great tech. You don't know who is faking. Deepfakes becoming more real than the real person. So there are a lot of cyber attacks will be engineered by Gen AI. The pace at which the cyber attacks could be unleashed will be unprecedented, right? You could have like these AI agents, if you look at the complete doomsday scenario, AI agents rewriting their own code as and when we find, how to disable them or how to nuke these ransomware, they'll rewrite themselves. And, so it's going to be an interesting one. So anyway, so whole idea is they are saying digital economy will demand organizations to have 24/7 application availability and resilience against cyber attacks, faults, and failures. Again, a lot more focus on cyber attacks. That reminds me, is that recently we have been seeing a lot more attacks on US soil. We had one of the biggest insurance got attacked. United Healthcare was attacked. A utility got attacked. Microsoft, was it Microsoft last week? Oh no, sorry, Facebook was offline. Like Facebook, Instagram, WhatsApp, they were offline for a few, maybe hour or something. Which are the Microsoft or some another big company had an attack. So recently we are seeing a lot more cyber attacks on the strategically important companies. So anyway, what's the problem it is trying to solve? AT&T had a leakage, right? Like 76 million people. Yeah. They had a ransomware or whatever. I don't even know the details, but 76 million people got their data leaked out. Problem it is solving, again, net, what they're saying is solutions were built for, backing up the data. Solutions were built for securing the data, but there are no solutions which will do both, right? The backup as well as the security, securing the data. And I don't know how far it's true that existing solution full trust security model increases supply chain risk, because all Zscaler, CrowdStrike, and all Pollard, they all now talk about zero trust security, right? And when it comes to Rubrik, they also talk about zero trust data security. And if I recall, the zero trust term at least got popularized by Zscaler and I think Okta, but they were focused on a network security, right? Zero trust network security. I don't trust no one. I invited you to my house because I know you, but I'm not going to allow you to move into every room in my house. Before you move into every room in my house, you have to re-authenticate yourself. Zero trust. That's what the zero trust means. As compared to the older way of doing it is if you past the firewall, you have a gate pass, you get into the house, and you have access to the whole house. Not the case anymore. Now the zero trust has become a standard. What Rubrik is saying is we are applying the same zero trust concept to the data. You're trying to access this particular data, you have to re-authenticate yourself, right? And then they talk about their RSC, which is Rubrik Security Cloud, is a SaaS platform. We'll talk more into that. What's the market size overall? So now they looked into, so overall their market size is 52.9 billion, 53 billion by calendar 2027. So 3 years out, they think that the overall market size is 53 billion, of which the data management will be around 15.4 billion, which is traditional backup and recovery. So I think that's where the rubric got its start. And then the security will be 37.5 billion by 2027. So that's how the overall 52 billion came around. So 37.5 billion is on the security side and 15.4 billion is on the data management. Yeah. So 53 billion today, they're over, we'll get into the financials. So yeah, I mean, it's not insignificant market. 53 billion is good, big enough market. So let's say even if it captures what it says that its overall market right now, what they're seeing, if it captures, let's say 25% of the market, that will be what, $13 billion, give or take, give it and this is like back of the envelope calculation, right? Give it a 8 times sales. So that should be what, $100 billion company? 8 times is super expensive. 6 times, if you're looking at $70-80 billion company, it'll be a decent company. But provided it can capture 25% of the market, right? We'll see what's their current revenue is. So we'll come back to this. So how they started? Historically, they started with a hardware business to do a data security. So you basically install a Rubrik appliance. And the way they used to earn money was you take an appliance, you give me a license fee and then a maintenance fee. But that will be a low margin business because there are other companies in the same business like Veritas and Dell EMC, right? So they did a good thing, maybe a little late, but in 2023, they pivoted to cloud. So they started with this, just the hardware appliance, which they call it the Converse data management. And then they added cloud in 2019, means they allowed organization to secure the data, even if some of the data is sitting in, let's say, Amazon cloud or Azure cloud. Right? And they added few more products to them, to that, which is like anomaly detection. And this is where I see they're now started moving into, competing with other cybersecurity companies like CrowdStrike, etc. 2023 is where they launched their own risk security, Rubrik Security Cloud, which offers the same stuff, right? Doesn't matter if your data is on your own data center or is it sitting with Amazon in S3 bucket or is on Azure or let's say Oracle cloud. We're gonna secure your data across all clouds. Even if you are in a regulated industry, you can't, or you have a sensitive data that you can't move it to the cloud, they still have an offering which they call RSC private. This is pretty standard. I mean, when I was working in a company, we similarly had a cloud offering, we had a private offering. And now I realize that that time I used to think what a crazy name is, what's called a private, but looks like this is an industry standard, right? And then they have a different flavors of the products, right? So which is like foundation edition, business edition, enterprise. You a little bit of additional functionalities in each one of them. And then in 2023, they started to transition user from the old maintenance contracts over to now the subscription one. Right? So remember, in old way of revenue was get your whole license free upfront, and then every year you do maintenance contract. Right? Now there's no more. Basically, now if you're moving to a subscription side, which is what the market loves, gives you better valuation, is it's based on whatever modules you're subscribed to. I don't think they moved to a usage based yet, so it's still based on a subscription. But you will every whatever monthly or annual you'll have a subscription, and you pay based on that. So as we have seen in many companies, we should see a little bit of a volatility in revenue. Whenever you switch from a license-based to a subscription-based. Because in a license-based, you will basically go and, let's say, if you have a license to use it for next 3 years, you'll get all the money upfront, recognize all the revenue upfront. In a subscription-based, you're only going to recognize 1/3 of the revenue, right? But so you'll see a revenue dip and all. We have seen that in Splunk. I've seen that in SAP. Which other companies went through this whole transition model? We've seen that in Palo Alto when they started doing it. So if market reacts negatively to this, I'm not sure whether it will happen to Rubrik. That's one way to look at, hey, this is an opportunity to buy it because this will happen. If you're switching from your license to subscription-based revenue, it will happen. But algos might still go and because the revenue fell down because year on year, because now they are more subscription customers than the license customers, and the market might sell off. That's an opportunity if you understand how this works to go and buy it. Anyway, so they are moving customers from a license to subscription. This is how they started converged data management, which is their on-prem customer manage everything. That's called self-managed. Then they added a little bit of a cloud in which they'll manage, it will like a hybrid. And now this is where they're moving all their customers to, which is Rubrik Security Cloud. Transition is still work in progress. So right now they have both license as well as, traditional license as well as the transition license. And I couldn't find anything which says how many customers are migrated and yet to be migrated. It did in 2023. So still in progress. And generally what happens is if a customer has got 3 year worth of license, they say, I don't want to take this headache of migration right now. But migration means even the customer has to involve their own tech teams over there. They say, so best time to talk about migration is when it's coming up for renewals. Now, we don't have visibility into which customers coming up when renewals, etc. But this is pretty standard stuff. Their platform, they talk about data protection, enterprise data protection, unstructured data protection. Basically, doesn't matter whether you have your data in your NAS storages or it is on the cloud, or you have a data sitting in your, let's say, backup disk, etc. Rubrik says they have a product for each one of them. Okay. And then they added more products, which is called threat analytics, similar like cybersecurity, data security posture, which talks about identify where your sensitive data is and what are the risks related to that. Then recovery, let's say you got hacked, they'll be able to recover your data, right? And then they talk about what the tech is. The most important thing that I saw in this tech was the time series data and metadata. So basically they're focused not on the data, but the properties of the data itself, which will, sometimes that tell you more what the data tells you, right? And again, don't want to go into the details of this tech. Number one, we don't have that info. It's only my figment of imagination of thinking around how they could have structured the data and the metadata over the period of time, and hence they're able to figure out anything has changed in the history and detect it as an anomaly or whatever. Probably some more techie folks can comment more on this, but everything else is pretty standard. Now, how their business, how they go and sell it. They have a land and expand model. Land is get customer in a 4 distinct way. Whether if you have a private cloud, we'll sell you enterprise software you install in your data center, but works just like how the cloud offering will work. Your NAS, a network attached storage for unstructured data. If you have 100% cloud, then they have offering, and then for your SaaS applications. So land the customer, and then basically the way they expand it, more data under the existing application, get new applications, right? Today, you're only securing financial data. Tomorrow, you could also be securing the marketing data or HR data, right? You get more applications under it. Or you start to sell more data security products to existing customer. You never bought threat, whatever they call it as, threat analytics. Now you've used my data security product for a year, 2 years, you're happy. Maybe we'll sell you additional threat analytics. Looking at financials, only thing that, okay, so only thing that, now if you, it's very clear, right? So from 2023, the appliances were 138 million, 2024, 51 million. It is because now they are not selling appliances, they are giving it to their contracting agents, contracting company, which is the Super Micro. They are building appliances for Rubrik, right? Not just for NVIDIA, but they also build for other companies. So revenue grew only 4.6% year over year. Gross profit grew nicely, 15% year over year. But operation expenses also grew 16%. So net only 4% growth. That's nothing, right? Just 4%. But let's dig a little bit deeper into that and see what are the components. Where's the slide of that? I think I'll have a slide a little bit later. But anyway, if I look at the quarterly, and again, this is all information in the S1, right? And see how they have grown. So except the Q4, where the growth was from 135 million to 175, all others were not that great, right? Now, you could say, oh, that's bad company. They didn't grow the revenue except one quarter. Or the other option could be, guys, when did they start to transition users from license-based to subscription-based? And some of that could be attributed to it. So maybe we should not compare. We don't have that info. So I'm not going to ding it based on, hey, you didn't grow every quarter, because they did start their transition in 2023. And when they started their transition in 2023, they will see a dip in revenue. So balance sheet. Let's look at a balance sheet. Nothing that stands out. They got what, $279 million in cash equivalents as short-term investments, which is fine. Cash flow side, what I liked is cash flow stock-based compensation is only 5 million. Sorry, 5 million, which is like good. It's like 10% of their overall revenue. So here's my little bit of comment. Cash equivalents 279 million in January 20. So their quarter ends in January. Their overall cash expense was close to 256 million, and they don't make any money from operations. The cash flow from operations is negative. So business doesn't generate enough cash to meet the cash expenses. So either they need to raise VC money. Market is not friendly for VC monies, or they need to raise debt, or they need to do IPO. So they did, further looked at, they did actually raise debt. 96 million in 2024, 171 million in 2023. Maybe don't want to raise any more. And so then now, okay, we need to go IPO as well. Other source of cash was basically invoicing the customers in advance for a multi-year contract. So even though the revenue will be recognized over a 3-year period, their contracts are 3 years, they get the cash in. Right? So I'm not saying that they are running out of cash, but I mean, the fact is that they do need money. Right? You can't pay your vendors by depreciation, right? You need cash. Okay, key business metrics to focus on. Subscription ARR. Even though the revenue grew only 5%, 4 point some percent, subscription revenue grew 47%, which is good. Slow as compared to, let's say, Snowflake, etc., but 47% is decent enough. And this is what Street would want to focus on. And within subscription, more important is their cloud subscription, right? Not the, let's say, the licensing or the data on-prem subscription, but the more is the cloud subscription, which grew like 119%. Of course, the base was lower, but I really like this growth. If they can continue to grow their cloud ARR, because reason I like this is because this is a higher margin business, right? So that will be that any growth here, we're gonna positively go towards the EPS. So I really like this one. Skipta is dollar-based net retention ratio. How many customer, how much of the existing customer, how much is spending now? If they spend $100, now they're spending $133. It has decreased, but 133, there are very few companies that I can remember who have such a high retention ratio. 6,100 customers across multiple industries, very well known: Barclays, Home Depot, Whirlpool, Illumina, NJ Transit, Tech, Pfizer, Iron Mountain. Partner. This is important, a little different than other companies. They sell mostly through their partners. There were 3 partners, and those 3 partners accounted for 75 to 80% of their overall sales. So they're heavily dependent on sales through the partner channels. Okay. To me, it looks like the initial sale is done by partner channels, and then their own sales team basically focus on closing the deal and doing the expansion work. They acquired another company called Laminar Technologies 2023. So a little bit you'll see goodwill on their balance sheet because of Laminar. Next, management skin in the game. I think there was enough skin in the game. Look at how much of hold on. Overall, yeah, he's got like 1 million of a stock awards. The CEO. So I think, and he owns more than 7%. I think there was some slide where I had the overall percent. So I would say decent skin in the game, which is what I want to see, that the management is aligned. Interesting thing. In 2024, Jan 31st, the fair value of their shares is $28.63. So let's see where it get listed at. That will tell us, did they have a down round or an up round? In 2021, the fair value was close to $36. So obviously, since 2021, the fair value has decreased because overall the multiples have decreased. But we'll see probably where it actually lands. Okay, they also whereas Reddit had mentioned that they're going to grant whatever 600K for to the CEO. Similarly, CEO here will be able to the options will be granted, almost 8 million options, but over 10-year period, which I like, getting everything on day one. And there is also, before he sells, he has to hold this for a year or 2. There are some conditions. So I like that. Other thing, use of proceeds, nothing that stands out. Risk, little bit of a partner concentration risk because there are only 3 partners. There is a little bit of a legal risk that I saw. They currently are being investigated by Department of Justice in October 2023 because someone in some sales team violated federal law, federal contracting law. So based on the information that I see, maybe someone tried to bribe or something to win some government contract. Who knows what the reality is? But this is an ongoing lawsuit. So you need to be aware of this. No accounting irregularities, no note around that we don't have a financial controls, etc. No off-balance sheet arrangements, nothing else. One secondary transaction, one of the initial, I would say, investor sold some of the shares to the investors that invested later on, but nothing to be worried about. Yeah, something to think about is dual class structure. They have a 2-class, class B has 20 votes per share. So don't think that if you buy the shares, you'll be able to impact or affect the direction of the company because the CEO owns 20 times more votes than you do. So net, I think the business is decent. No, I couldn't find any shenanigans. They pivoted at the right moment, but the growth is slow. And I think they really wanted to pivot to cloud so that they can gather more valuation, but we'll still have to see. They haven't mentioned how many stocks and what the pricing is. So we'll update once we have that information. What price are they going to sell those stocks? So probably we'll give another update once I have more info. But unlike Reddit, where even looking at the S1, I told, too bad. I'm not saying too bad. Doesn't mean I'm going to invest in IPO. I generally don't invest in IPO. But this is something which is not like, fire that I'm not even willing to look at. So that's it. That's a rubric. Very different from what I saw in Reddit. That was like, highway robbery. At least I don't see robbers here. Let me put it that way. Are they good people? I don't know, but they are not robbers, unlike Reddit. All right. I guess that's it for today. We way over our time, but glad we were able to go through it. All right. Anything else? So last reminder, if you're interested in the bootcamp, go and register for it. Just clicking a link won't open the Zoom meeting invite. The Saturdays will be, but our bootcamp, every drill will have to go through the registration. How many stocks? Yeah, they didn't mention that how many stocks they're currently offering. So probably they'll update it. And when they file an amendment, we'll get to know. So I think because this generally it happens when they do initial filing. Now they'll go on a roadshow. They'll figure out what's the market, what's market thinking about the company, how much is the appetite in the market. And based on that, they'll decide the pricing and the amount of shares that they want to give. So we'll probably get to know a little more after their roadshow. That 8 million shares was what the CEO will be eligible for stock option grants after the company goes public. So that was 8 million shares granted to Bipul Sinha. And with this total should be 8 million over next 10 years. Alrighty, cool. Thank you for attending today. Hopefully this was useful for you. Those who are attending for the first time, thank you that you considered to spend a couple of hours or maybe 2 hours, 40 minutes with me. I really appreciate your time, and we'll try to make sure that, those 2 hours are actually useful for you in managing your money. Thanks, everyone.
Yes, Vivek. One question. The
Sure.
bootcamp link, right? You said registering on the meetup is enough, or is something else you are saying?
No. So if you say yes on a meetup, the Zoom link, actually click on it. That's where you'll have to give your name and the email ID.
Okay, I'll check that. Yeah, sure.
Yeah. God, it also tells me how many people are joining in. So then I know, okay, how to structure the content, because we have only two hours. And I can communicate because for homework.
Yeah, makes sense. It really needed. Like you said, it's a practice is required. It's just not listening. That's what we are hearing so many from YouTube. They're not practice sessions, right? That's where we lost.
Yeah. So
We really need your help. Yeah.
and that's why I want to give a 1 per week so that you can go home and maybe, do something.
Give regressive or it give as much as possible. I'm okay.
Alrighty. All right. Thanks, everyone.
Thank you.
Bye-bye.